Welcome back now to our next conversation. Nigeria Capital Importation Report for the second quarter of 2022 showed that the inflow to the production sector recorded the highest growth in the first half of 2022, with the banking and financing sectors trailing behind, while inflow to shares took a downward turn. Let's get a sense of what to expect for the third quarter 2022 Capital Importation Report. Join us now is Segun Adams, research analyst at Afrinvest Research. Join us via Zoom. Great to have you on the show.
Thanks for having me, Ladi. Good morning to you.
Good morning. So as we prepare for that report tomorrow, that's for Q3, what are your expectations?
In providing our expectations, I would just like to quickly provide a bit of context or perspective. So the Capital Importation Report published by the NBS is a quarterly report which tracks cross-border capital flows, whether in the form of foreign portfolio investments. They talk about investments in equity, money market bonds, type financial instruments, or you talk about the more patient long-term capital foreign direct investment, which can also take the form of physical capital importation as well. And then you have the other capital such as loan or trade credit and so on. And why this report is important is for two reasons primarily. First is that capital importation is important for any country to bridge their savings investment gap. By that, what we mean is that every country has a level of savings that they target to be able to engender growth or accelerate growth. And it can be the case sometimes that the savings you can mobilize domestically is not sufficient to meet that mark. So you have to rely on capital from outside your economy. And secondly, that report is also a form of litmus test to see what the perception of foreign investors towards the Nigerian economy is. And so far, what we've seen is that since the outbreak of COVID in 2020, capital importation into Nigeria has been somewhat, it has been waning and it has been not very impressive. For instance, in 2021, capital imported into Nigeria stood at around $6.7 billion. And when you compare to 2020, that was around 9.7 billion. And we take the very high view and look at pre-COVID, what was the level? It discovered that it was around 18 to 24 billion COVID. And so it's not a very positive picture we are seeing at the moment. What is, like you mentioned, Ladi, as our Q2, capital imported into the country stood at $1.5 billion. Q1 was around 1.6. You put both of them together, you have around 3.1. And then you say, well, let's make the assumption that we continue at that pace. What do we have at the end of 2022? 6.2 compared to 6.7 in 2021. It's not a very pretty picture. And then when we talk about the report we're expecting tomorrow, if you take a clue from the monthly reports published by the CBN, because the capital importation is derived from the CBN based on interbank transactions, how they track it, and as well as some information from the customs. So based on that report, we put it together. We think that unless there's an update, capital importation should come in at around 1.17 billion for Q3 2022, approximately 1.2, which means that for the third quarter, we are seeing this capital decline. And the implication is that when you put all of these three together and sort of analyze and say, oh, at this current rate, what would the picture look like by the end of 2022? Then you're looking at a case where capital imported into the country for the full year is around 5.7 or best case $5.9 billion. This would imply that you have to go back to as far as 2016 to look at where annual capital imported into the country is this low. So we think, based on expectation, it's not very positive. And in terms of the breakdown, the utility of the report will be seen tomorrow will be how it aggregates that number and shows us where this project is coming from. But we suspect that it will likely be from the portfolio flow component.
All right, we'll definitely be looking out for that. But back to Q2 now, what would you say were the key factors that affected the flows in Q2 2022?
Yeah, thank you very much. So the factors are affected in Q2 and the same that we think would drive this Q3 number. They are not particularly new, but to start with, from the global perspective, 2022, we saw synchronized tightening across the board, how central banks increased their policy rates to try to stave off rising inflation. In the US, for instance, rate has risen from near 0% to around currently around 4.25, 4.5% levels. And what impact that has on economies, emerging economies, and economies like Nigeria is that the tightening of global financing conditions leads capital owners to rethink how they allocate this capital. And there's usually what you call the flight to safety, and then they just look at the United States, for instance, which is a very important economy, and say, oh, their rates are at this level at the moment. Why keep your money in the emerging markets where their currency is being pressured? They are having a lot of shocks affecting them. So typically, they just tend to take their capital elsewhere. So I think Nigeria, as well as some other countries, experienced this in 2022. But when you come down to the economy, some of these problems are homegrown, and they are, like I said before, they are not really new. For instance, you look at our FX policy. It's one of the key concerns that investors are having, and whenever there is a global shock, one of the concerns is how will this affect the foreign exchange dynamics in the country, as well as policy direction. Look at policy that sort of impede the flow of capital to try and manage the situation, and the sort of unintended negative consequences it can have on investors' confidence. And then again, aside from that, the overall business climate in the country is something that investors are wary about. For instance, you have the situation like we're currently experiencing with the power outages at the same time having capacity at the same time, and it's not a very good situation. Importantly, also, there's the consideration of the insecurity that has persisted in the country, something that affects business decision making, affects how investors look at the economy. And I think the last one that is kind of important to also note is the pre-election uncertainties. In 2020, most of the outlook was around how would the run-up to the election be, how would the social economic situation look like, would it be calm? And thankfully, we have seen some bit of that so far. But we think as at that time, that was some of the major concerns.
All right, talking about the capital market now, what effects do you see, in the long run and short term, if these factors still persist that shaped capital importation in 2022, that's Q2, how do you see this impacting the capital market?
So, thank you very much. So, in terms of how the impact capital market, like the saying goes that every class has silver lining. So I say that the performance of similar market, how that despite the decline in growth participation was seen over the years. For instance, in 2022, as of November, yet participation was around 16% for foreign investors, as around 15% for September in the year. For long term, this is while short term it seems to be stated all of global stocks. So for long term, this is make it for long term because we want the market. So liquidity debt we are for our market. When you look at a country like Nigeria, in terms of FH, it according to the World Bank, is currently it was at around 0.6% in 2021. SSA around 3.
All right, Shago. Shago, so sorry. It seems your I can't really I can barely hear you at this point. It seems the volume is dropping, But maybe if you speak up a bit, maybe I could hear you better.
All right. How about now? Is it
okay? Yeah, sounds better. Yeah.
Yeah. Apologies. So, like I was saying, issues we have.
All right. Looks like It's still dropping. It's still dropping. Maybe we'll try this again.
Okay, no problem.
Okay, okay.
Sorry about that.
Sounds great now. I can hear you now.
Sounds great.
Yeah.
Oh, okay. I've done away with the headphone. I think he had
Fantastic.
to
Yeah,
do
let's
the
do it like
headphone.
this.
Okay, awesome, awesome. So essentially what I was saying is that short term, we seem to have been able to see some, get some or observe positive outcomes in the equity markets. Our equity market was 20% year to date last year, the year before around 50%. And most of it was because we were insulated from global shocks. But long term, this is not very good. You want your capital market to get deeper in terms of liquidity, and there's a limit to which you can mobilize capital domestically. Some of it has to come externally. And when you look at some of the underlying issues that is affecting capital importation into Nigeria, it tends to how it affects the pricing of Nigerian assets and the perception that foreigners have or foreign investment or foreign investors have of our economy. So we think that these are not very good long that we should pursue, even though short term we've seen some positives from how the equity market performed. So long term, it will affect liquidity, it will affect perception, it will affect pricing of Nigerian assets.
All right, given the trends you expect to play out in 2023, but we're seeing, globally, inflation, seems to have peaked. Hopefully, with what we've seen in the Eurozone and the US, and we're seeing the Fed also looking at, slower pace of rate hikes, but we still have aggressive, rate hikes here in Nigeria. How do you see this impacting capital importation into Nigeria going forward?
Okay, so Nigeria, we think that it's quite a relief or it should be a relief for everyone if the current signals we are seeing in terms of inflation persist. How that in the UK, US, across Eurozone, even in Nigeria, we begin to see early signs that it could be the case that inflation is cooling off. And when that happens, policymakers will have the incentive to either slow down the pace of hiking or choose to hold rates, or in fact, they can even pivot at some point this year. And so what that will do for emerging market assets generally is that it will lead to capital flow reversals. Investors will become more risk on and try to push capital into these markets. For like the challenge we have is that some of this problem we have is down to our policies, down to not just the economic factors or the global factors, but how our policy we go about implementing them, how the policy also affects business decision and all of that. So we think that for Nigeria, we are quite optimistic. In fact, our projection is that for 2023, we expect capital importation to improve to around 7%. We think that the election will come with a bit of optimism. All the candidates for the election, they are pro-market, and that will bring some sort of comfort. But we think that there's more that needs to be done. We have to address issues like insecurity, I mentioned, infrastructure, and our policy in terms of even providing guidance to investors. They have to know that we are clear on the path and we are committed to that path rather than a flip-flop and unclear kind of implementation.
So I guess what you're saying is whoever wins, the election is pro-market and pro-business. Yes. Whoever. Okay, that's good news. But what are your policy prescriptions now for the next CEO that takes over affairs in Nigeria to boost investor confidence into the country?
Okay, thank you. So in terms of policy choices we think that are paramount for the next president, we're happy about, we've seen the manifesto of the leading candidates. There are common themes of others on reform, subsidy removal, exchange rates, liberalizing more, privatizing, and all of that, giving the private sector more room in the economy. And we think that one of the key issues we have to address will have to be insecurity. And when we talk about FDI, one of the key considerations will be how safe the country is. We think that in the last couple of years, we've seen the spate of insecurity increase at an uncomfortable rate, and this is not good for business. So we think that one of the four most challenge that must be addressed will be trying to bring security and normalcy to the economy. We think on top of that, there has to be also infrastructure. We have to be focused on providing infrastructure to reduce cost of doing business in Nigeria, to improve the ease of doing business, reduce also all of the bureaucracies around setting up and running businesses, as well as trying to harmonize taxes where they have to be. Importantly, we think that the orientation we have to take going forward is that we have to shift away from FPI and deal more with FDI. FPI, called hot money, is somewhat like a quick win. Sometimes you just do one or two things, raise rate here, raise rate there, and if some other policies are in place, capital flows in, and investors like that because they can easily move in and out. They don't have to commit long term. But what you need to grow a country is actually that long term commitment. And to have that, you have to take critical and beyond the surface reforms to really prove or show that you are ready to do business.
Right, fantastic. Well, we'll be looking out for that report for Q3 2022. That's supposed to come out tomorrow. When we get that, we'll see if there's an improvement from what we had in Q2 and the year-on-year performances. Thank you so much, Segun Adams, Research Analyst, AfriInvest Research and Consulting. Thank you.
Thank you for having me.
All right, so we'll take a break now. When we come back, we head on to the market to see what Agnete has for us. That's the moment to stay with us.